Let's talk about cash flow. So these are actually 5 to 9 rental incomes from just one property. And basically, if you look at the Queensland 5-unit design, this is what they look like. So you've got a lounge area, you've got a kitchenette in there, you've got a separate bedroom, you've got a bathroom and a courtyard, all encompassed in one rental unit that you can rent in that property. And now then you've got a second one, which is identical, third one, fourth, fifth. So you're getting 5 incomes from the one property, and you've got a common area in there as well with a kitchen and a share laundry for the tenants to use. And of course, there's some car parking there as well. Now, if in Victoria, you can actually have up to 9 studios, which equals to 9 incomes, right? It's a very good market there at the moment for these types of investments. Once again, you've got the living area, you've got a kitchenette, you've got a separate, ensuite bathroom, and then you've got that in the second, third, fourth, fifth, sixth, seventh, eighth, and ninth studio unit, all in the one property. 9 incomes, 9 separate studios with separate entrances and so on. There's also private courtyards that these properties have. And there is, again, a common area with a kitchen and a laundry, right, that the tenants can share, but they virtually never do share the kitchen because they've got their own private kitchens inside their studios or their apartments. So let's have a look at the type of income these properties are getting. So this is a property that was constructed in Melton in Victoria. It's getting $3,150 a week, fully tenanted, 9 units at $350 a week each. And 2 houses in the same suburb will not give you the same rent. If you have 2 normal properties there, you'll get $1,030 per week. This is right now today. I've done the analysis of the rentals in that area. Now, the one on the left actually gets, obviously, is fully furnished as well, includes all electricity and all costs. So it's a lot more convenient from a tenant's point of view. Now, there's another suburb, Werribee. Don't know if you know that one, but again, multi-unit, 9-unit occupancy property, $2,500 a week rent. A house in Werribee, which actually looks nicer than the 9-unit one, if you like that style, and it's only getting $650 a week, right? And it's got a garage and everything, and yet the rent is it's like night and day. So Queensland, same thing, same area, different returns. This is a high cash flow unit to $2,519 a week it's getting right now. Normal rent in that same suburb, $990 per week. It's a suburb called Deagon in Brisbane in Queensland. So let's have a look now at the capital growth. I hope by now you can see that the rental income of this is absolutely, fantastic. But what about capital growth? I often get people asking me, will this actually grow in value? Well, that's the good news, because a non-studio co-living with 9 units in it just sold for $500,000 profit for the investor once it was built in a suburb of South Melton in Melbourne, on the outskirts of Melbourne in Victoria. Now, before, the investor invested $1,100,000 on an empty block of land to build this property. The expected yield was about $147,000 per year in income, 13.4% return. After just sold literally 2 or 3 months ago, it sold for $1.6 million.